Hey guys, my name is Bas Koyman, and today's topic is about trading. I really like to talk about trading as one of my topics, as I am a full-time coach and trader. I'm part of the global traders team, and we are making sure everybody gets educated through iMarkets Live as a global university. And next to that, we are trading together. We are doing a lot of webinars. And one of the things that I really want to talk about today is a strategy to make sure that you have a certain amount of profit and that you can make sure that your losses are as small as possible. And this is a strategy that plays trading really on the safe side. So we chose to actually work with people, and 90% of people are completely new to trading. So my personal strategy as a coach is always to make people as profitable as fast as possible. So mostly the first 2 months, they are on a demo account practicing, but after that they go in for real. And for real means also that they put their own personal money, let's say €100, or like not a lot, but they put their personal money to get started into a trading account. And what I actually always teach people is to make sure as soon as possible, but not too early, to move your so-called stop loss to break even. So what's a stop loss? A stop loss is a number that you give at the beginning of your trade. You have an entry price the moment that you start trading, like the price that you buy. And then there's a stop loss and there's a take profit. And those two numbers, they're basically giving you a certain value. So let's say in euros, you place a trade with a small lot size, so it's a small amount of shares or a small amount of currency. And you trade and you like take a stop loss of -€3 and a take profit of +€6. So this certain price level you give in at those stop loss and take profit, and at that moment you say, okay, let my broker automatically close my trade at -€3 or +€6. So what is one of the strategies that we really use at the beginning, but also later, or in my case when I'm managing an account for someone else or for a group of people, is that I'm making sure that I can move that stop loss to my entry point as fast as I can. And this is a strategy that you can use because I think that it's better to have a risk-free ride than you have a ride with still the stop loss in minus. So let's take this example of -€3 and +€6. What I simply mean is when your trade is going up like 20-30 pips, so in this example like 2-3 euros, when you are 2-3 euros in profit, you move your potential -3 to €0, and mostly like a little bit higher, so like 50 cents or 60 cents or 40 cents or whatever you want to put it. So you just put the stop loss level in a little profit. And what you do at that moment is like before you had a trade -3 or +6. From that moment you have a trade +50 cents +6. There can never be a minus trade from that trade anymore. I know that 50 cents is not a lot, and you will need a lot of 50 cents to make a monthly salary. But -€3 are going to screw up your +6s a lot more. So what I personally really like is that when a trade is 20-30 pips in profit, pips is a certain amount of ticks that the trade made. So when it is in this profit, it mostly don't go back to that entry point anymore. And if it does, then that was just the exhaustion of the trade. Like, I know you need to give trade like space that it's going to go up and down and up and down. So the point is, if you do this too early, when the trade is in like 5 pips plus, and you directly do this, then you it's like, oh, okay, I'm in like a 50 cents or €1 plus in this small case example. It's like, oh, I'm in €1 plus, let's move the stop loss to break even. Then you will see that you will have probably quite a lot of break even stop outs. So that means a lot of times that you get this 50 cents or 30 cents or €0 profit. Of course, it's no minus, so it's still good, but you need to give a trade time to go up and down and up and down. Like that, that's just what trades do. But if it's in 20, 30 pips profit, it shouldn't go back to your entry line anymore. If it does, the chance is also very big that your trend is over, that your that your take profit was maybe a little bit too ambitious, and that it actually would have gone to stop loss. So I analyzed a lot of my trades, because making good trades and making bad trades is one thing, but the second thing is how to analyze your trades after your trading, and not a lot of people do that. So a lot of people, they are saying, wow, I had profit today. Great. Why did you had profit? Oh, I had losses today. Great. You have some of those days. Like, you cannot ignore that. So, okay, maybe you don't say great, but you say, okay, it's shit for you. It's bad that you had a bad day. But why did you had a bad day? I'm always looking to the why. I'm looking to the why in people, but I'm also looking to the why in trading. So why did you had a bad day? What did you learn from that? And how can we make sure that if you had 5 lost trades in a row, that why didn't you call me after 2 or 3 and say like, hey boss, what am I doing wrong? I'm not the guru or the guy that knows everything, but we can analyze, we can talk, we can see maybe there is a pattern with something that you do wrong, or maybe there is a certain belief that you have that's maybe not really a technical belief but more a belly feeling, and we trade technical, so maybe that belly feeling is something you need to put aside and you need to go back to technical trading and refresh your mind. So there's all kinds of things, and the point is that or people don't analyze at all, they are just sad or happy. And the second thing is that if they analyze, they mostly really focus on the bad trades. So they say like, why this trade goes bad? And I want to learn from that. And that's good. But what I really can advise people is to also analyze your good trades. Did you go out too early? Did you go out at the perfect point? And this is one of the things that you can really see if you connect your account to Myfxbook. Myfxbook is a website where you can analyze basically trade by trade, and it gives you also like, you had +6, but if you would have waited longer, you would have potentially had +9. So it actually does this analysis for you, and you can look trade by trade. What are your patterns? Are you too out too early? Are you too impatient? Are you too greedy that you like, it went to +9, it went to then back to +6 and you went out? Then that will also tell you like, if you would have gone out earlier, you would have had +9. So you can see that you are waiting too long. So doing analysis after your trading is very, very important. And I will do another session, another video where I will show like a Myfxbook account and maybe a demo account or something like that, where I can show some trades and I can show you how those things are working. But for now, I would just like really recommend that I analyzed a lot of trades, and I saw a lot of trades in +20, +30 pips, not going back to entry price. If they were good trades, they went to the actual take profit level, or I closed them somewhere between 40 and 50 or 70 pips. So if your trade actually goes back to break even, then it was just the end of that trade. And you could have closed it at that like take profit 1 level 30 pips. You could close half of it. It's also a very, very good strategy. If you have a bigger lot size, you can close half of your trade at that level and move the other half, make it that sure that it's a break even trade to go to your, let's say, 50, 70 pips level. So you just secure some profits. You take that profit and the rest you let it ride, or it goes back to break even. So you can like play with this kind of strategies. You can test them. You can see how it works for you. I have one very, very good student that is like actually working a lot with like trailing stops, so that like your stop loss is moving with you. At the beginning he put it too close, so almost all his trades were like 50 cents, 50 cents, 50 cents. Of course it's not really motivating, but he also didn't lose. So he gave the trade a little bit more space, so that means that sometimes he was not on time in break even, so he had -3 and then plus, -3 and then plus, and then some 50 cents. And it just, you start to analyze. And he kind of found a great amount of pips distance for a trailing stop, and for him that's around 20 pips, which is the same as the moment when I am moving my stop loss to break even. And sometimes I use a trailing stop, which means that your stop loss is growing with your trade. Sometimes I don't. It really depends what kind of trades I'm doing. Trailing stop and other strategies, I will also, like, I can talk hours for that, but for now I just really want to talk about this break even strategy, because it is good to make sure that you have no losses, that you have some trades in break even, and that the rest is going to profit. And the more not losses trade you have, the more profitable you will be. So if there's any questions regarding this, please let me know in a personal message, in the comments or whatever. And if you have a certain question about, like, maybe trailing stops or other strategies, like some people are using a lot of Ichimoku, they use Bollinger Bands, they use like all kinds of strategies. Like, I'm using personally a few of them. I'm trading for a couple of years, so I know a few of them as well. And I really like to hear from you guys what you want to know more. I can do more trainings, and I can just share with you what are my experiences. You can test them yourself, and if they work for you, then that's great. So thank you very much for watching, and tomorrow we will move on with the next topics. Thank you very much. Bye bye.